Hello everybody, welcome to this special presentation. Today we have the honor to receive Mr. Ron Perry, VP Treasurer of Metanor Resources. So Mr. Perry, thank you for coming by.
Thanks for having me.
Excellent. So last time you came to visit us, we did first gold smelting on your bachelor project. So what has been going on ever since?
Well, we've been in ramping up, and obviously as of today, we announced first our production numbers for October, which was 4,000 ounces, over 4,000 ounces. And now we also, right away after that, we announced that we're in commercial production. That was done simultaneously at, we had a press conference with the Quebec government in Quebec City at the Quebec Mining Show. So it's a big day today for Metanor.
Excellent. In terms of the production process, because I know are you guys had some challenges to scale up the production, or with the 4,000 ounces that you guys are producing right now, will you be able to meet the target of 60,000 that you set in the last interview you gave us?
Okay, let's go back. We got our commercial permit to commence developing the mine. So you're starting at, you've sunk the shaft, but now you need a permit to go do development and start. So that was last summer. So slowly we've been ramping up, and now we attained 4,000 before, but we're not at steady state. It's like climbing Mount Everest. You climatize yourself, you push your body at the highest you can, then you have oxygen deprivation, so you come down a bit. Then you push it, then you always want to go back to a higher level again, but you never want to come back you always want to beat the previous low. So what we've been doing is I call it the Everest method, so people don't forget us. And we're climatizing ourselves. So now we passed the 3,000 level. Now we're at the 4,000 level. So now we want to climatize here and make a push towards 5,000. So spring 2014, we're going to go to the theoretical maximum, which was in our pre-fees, is targeted of close to 60,000 ounces. So that we'll attain. So right now we're forecasting for our fiscal year is June 30th. So we're forecasting more than 40,000 ounces from last summer to this coming summer. And then thereafter, we should be going towards that 60,000 ounces for the following 214, 215. So
concerning the recovery rate, because I know that you guys
97%.
It's still the same.
It's stellar. It's amazing. It's even much better than the budget.
Tell me, because in the last interview you said us that to ramp up the production, to be in commercial production, you guys needed some money to ramp up that, around $7.5 to $10 million. You guys didn't want to go to the public market because you guys have a lot of shares, about 200 million shares that are being traded. So you were looking to either a partnership with Silver Wetton, which is your partner. Sandstorm, sorry, or a private placement. So how are negotiations going on there?
We're Sandstorm. The negotiation is finished. I mean, we got $20 million from them. It's prepayment, so it's not a loan. They prepaid for the gold. So right now, when we sell them gold at $500. It's really, they've prepaid $586. So I'm selling gold to them at like $1,086 plus or minus on an accounting basis. But cash basis, they only have to pay $500 now. But they prepaid $20 million 2 years ago, and we don't pay any interest on that money. So that money was worth a lot of money. So we are where we are on that side. We did some small financings because we're also doing exploration, and I'll get into that later on. But this company is doing exploration, a significant amount, development, because we're still not at full capacity, and we're doing producers. We have been producing, but now officially we'll make the accounting change starting December 1st, that we will show a profit and loss statement like the big boys.
But tell me, because a lot of gold companies, junior big companies, had a lot of challenges from investors saying that they don't spend their capital wisely or efficiently. You guys are exploring, producing also. How do you reassure investors to tell them, as the treasurer, telling them that, you know what, Metanor, we know what we're doing, we're managing our cash efficiently?
Okay, well, we've managed, one thing we've managed well in the last couple of years, we've never issued warrants or broker warrants. So right now we have the remaining 11 million warrants, and then there'll be no warrants outstanding and are fully diluted, are at 40 cents. Well, I was hoping today the stock would go to 40 cents, but anyway. I think, the market is a bit fickle in the gold still, we can get into that as well, but my views on that. But the point is that we've managed our cash as best we can. But you got to look at it this way. We got our permit for commercial production a year ago. We got it, we thought we were going to have it in February of 2012. Unfortunately, we only got it in July of 2012. So we're fully staffed, but we're not doing what we're supposed to be doing. So
What do you mean by it?
Well, I've got people, I'm not allowed to do certain things until I have my permit.
Yeah.
You cannot, it's the law.
Okay.
So I'm fully staffed, but I'm not allowed. So there's monies being spent, not being properly used. That's why we had to do a $10 million financing last summer.
Okay.
So since then, we've got our permit, we've been going. We're fully staffed.
Okay.
Got almost 250 employees, fully integrated. We have our own lab.
Okay.
We sharpen our own drill bits, and we even have our own garage where we can buy used equipment, and it looks as good as brand new.
Okay.
So we're fully integrated, and we're lucky.
Excellent. In terms of the drilling, I know you had the Barry project, but the grades there were not actually high enough to be profitable.
No, that's why we stopped. We stopped in 2010, and that's why we concentrated.
On Bachelor.
The game plan was to use the monies from Bachelor, which we did start to use to rehabilitate the shaft and then eventually sink the shaft.
Okay.
Well, unfortunately, we never got to sink the shaft because the grades fell off at Barry. So we mined over 40,000 ounces, but the grade went from 3-4 grams all the way down to 1.3.
Okay, so
but the good news, there's 800,000 ounces.
Okay.
All categories, not all measured and indicated. But so it is a very good area, and Eagle Hill is drilling, and they've actually drilled near our property. The good news is that because we have flow-through money to spend before year end and into next year, we have a very aggressive drill campaign right now because we have to spend the money. So
on Barry, right?
On both. On Bachelor,
Barry,
Bachelor on the extremities, which is eligible. Like we have a new zone which we hit a couple of years ago called the Diagnose Zone. We name it after the company that used the technology developed a site for us to go, and we did grab samples and we did some drilling. We're following up. We have a large anomaly because we did some induced polarization, so we have a good IP anomaly, and we're drilling that. We're also drilling about 1,000 feet from the mill on the way around the tailing pond. It's an interesting outcrop, and from surface going down 70 meters. We're still hitting, and if you ever come to, Michel has been to our mine, so he's had a geology lesson. So when you see red rock, pyrite, and quartz, usually that's associated with gold. That's the recipe for gold at Bachelor. And we are hitting from surface in a new area going down. So that's 2 drills at surface at Bachelor, one over at Diagnose and one over on the way to Barry. We have 3 drills permanently underground. Some of them are doing the definition driller, but there is one exploration. Eventually, we want to drill at depth. We're right now at 2,400 feet, and we're drilling towards Hewfran, etc. But the structure is open at depth, and we did it a long time ago. There was an intercept at 3,500 feet, so we're at 2,400 feet. So 1,000 feet, that's a lot of gold. So we will start to go at depth there. So that's 5 drills. Okay. Now we have 2 drills at Barry. Okay. And we are drilling near the Eagle Hill because we have a very large anomaly near their property. And their most recent press release, they were coming southwest. Well, southwest is Barry. So they're coming close to us. So there's something going on in the area, and we're both going to be happy, and we're going to start to drill both in the area. So
it should share costs too eventually?
No. Really. It's what he drills on his side, I drill on my side.
Okay. Tell me, because there's one thing that caught my attention in what you said, because you're drilling, you keep on drilling, but when are we going to have, because I know that Bachelor, when we take a look at the ounces that you had, the lifespan of the mine was about 4 years or 5 years. You said that the long-term strategy is not to actually only increase the resources to increase the lifespan of the mine. It's to actually be a company that could treat the ore of other companies that are around, because
we wouldn't really treat ore of other companies unless it's more profitable than. So in other words, it's like Gold Corp. If you take an ounce out, Gold Corp has to immediately replace that ounce. Otherwise, they've depleted inventory, and their market cap would go down. So they're always looking for new ounces. We're a producer. We have to do the same thing. I can tell you that since we've been producing at Bachelor, we've more than replaced what we pulled out of the ground. So we're on the way. We haven't done a formal 43-101, but internally, we know we've increased the resource. But what the company has, and is it's always the cornerstone of our strategy from the very beginning, is that we are the only mill in a 100 kilometers radius. So there are other ore bodies, potential mines, that we'd have to invest in, but we would eventually probably acquire them, unless somebody came to us and said, you know what, you'll make so much profit on my ore, well then our shareholders win. If I make a profit on someone else's ore, your ore, then I'm keeping my inventory.
Yeah.
So I'm doing very well for the shareholders.
Okay.
So one thing we have is that we are not tied to one mine. We
Okay.
can have multiple. That's why we also have the Barry mine. It's still, we still have the permits to put it back into operation.
Okay.
So Metanor not only has one mine, it has two mines, fully permitted.
Okay.
So we're very blessed, but there's no question, trucking it, there's not much profitability. The goal goes to 2,000, but the long-term strategy is to increase the resource at Barry, perhaps put a concentrator, increase the capacity at Bachelor, which is easy for us. We've already identified that we will increase in 2015. We'll start the plans to go from 800 tons per day to 1,200 tons per day. It's not rocket science, because it is a 1,200 ton per day mill. I sounded like I'm talking in riddles. But when you process Barry ore, because it's a softer rock, I'm keeping it very simple, I'm not a geologist, we can do 1,200 tons per day.
But even with the low grade,
But yes, but we can do 1,200 tons per day.
Okay.
It's the crushing ability of the rock, and that's what slows it down. So Bachelor rock is harder, so we can only do 800, but it is a 1,200. So if you understand, it's like snow painting the S 800, a 1,200 S soft, and 800 hard. Well, it's just like snow painting the 1,200, taking out the S and putting a H. I'm trying to make it simple, but it's a $3-4 million investment, and we're at 1,200 tons hard. For our Bachelor. So we're looking at a 2,000, we want to operate a year, give us a break, you know, but already we have plans to go from the potential 50, 60,000 ounces to 80, 90. So this is a company that can grow. But then we can also look at ore in the area to replace our inventory. We can also look at the concentrator in Barry, and then we can do a consolidation there.
But it's more in the long term,
It's more in the long term, but at least there's a backup plan. You're not a slave to one mine. If some companies, a lot of mining companies, have one mine, one mill. If there's a problem with the mine, if it caves in or whatever, there's no other ore in the area. It's attached. We have a backup plan, which is kind of unique to the mining industry.
And in terms of the cash that you guys actually have in your account, do you intend to actually make another round of financing soon, or would you?
We're trying not to do any financing at present. We are definitely trying to manage our cash. We have about 5 million cash and equivalents, and we're not burning any cash. In fact, obviously with 4,000 ounces, there's cash. There's more cash, so it's cash flow positive. But we have a lot of drilling going on. Our payables are up to date, because as you know, in Val-d'Or, there's a lot of companies that are having financial difficulty. So our suppliers are their suppliers, but we can pay.
Okay.
So now we're paying faster.
Okay.
So we're up to date pretty much with our payables. So we've got a lot of things going on in the cash area, but we're above water, and and we have 7 drills going at the same time. So this is a company that's the plan or is not more, as they say in French. It's alive and well at Metanor. We're going full steam.
Excellent. So in terms of if an investor is looking at this interview right now, came here for the 3rd time, and is still not convinced of your story, what are the 2 arguments that you could tell?
From a simple accounting basis, I mean, our book value is around 56 million. We're trading below book value. Most mining companies, especially the small ones, are trading at high multiples of book. We're trading below book. Replacement value. So in other words, say you found Bachelor and Barry, because we have 2 mines. To build the infrastructure would take you 3 years, 85 minimum. We have 85 permits at Bachelor, and we have permits at Barry. You need all those permits. And it would cost you probably around, our estimate, $200 million, 3 years to build. That's value. Now, what we've also said, you have to replace the gold to maintain your value. We have that. We also have a backup plan. We also have Barry. We have a lot of, it's the new frontier. It starts at Detour Lake, goes to Casabriardi, now Hecla, comes to us, goes to Lac Short, all the way to Joe Man, and even recently Tama Gold. That is the new frontier. Cadillac Break it's been taken care of over the many years. But up there, there's a lot more. There's a lot more gold. There's a lot of showings. So if somebody wants to invest and spend some time, which we do, there's a lot of the future looks very good up in that area, and we're there for the long term.
Excellent. So, Mr. Perry, I hope you guys will come again to visit us. You come visit us for another update. And tell us what's your...
Well, there's going to be a lot of news releases, obviously, with 7 drills. And plus we have our own lab, and we do send out samples to external labs but we have very good people working in the lab. But there was going to be a lot of press releases coming out, because with that many drills, there's always going to be some news. So I think the shareholders need to know that too, that there's going to be news coming on a constant basis.
All right. So we'll look forward for it, Mr. Perry.
Well, thank you for having me.
Thanks a lot.
Cheers.
Bye-bye.